I'm Vishal. I work at Multicoin Capital. It's a crypto-native investment fund. We've been around for 7, 8 years. We are a thesis-driven investment fund. So to that effect, we spent about a year or two this year, building about this thesis called blockchain-enabled collectibles marketplaces. So I'm gonna talk about that today. Before I dive in, I work for a fund. This is not an investment advice, legal advice, financial advice of anything. Let's get started. When people talk about tokenizing real-world assets, what do they typically think about? They talk about stocks, commodities, bonds, real estate on-chain. While that is great, it makes a lot of sense to tokenize traditional assets. We as investors don't believe that is where the eye-popping venture returns will come from. That's because, for example, anybody in this room today can create an account on Zerodha, trade stocks for free and instantly. So, these asset classes are really well served today. Now, the comparison I make is 30 years back, it would have made a lot of sense to put Times of India online, but I don't know of VCs who actually made a lot of money doing that. Instead, real returns came from investing in applications like Twitter, Instagram, Facebook, and such. Because the true unlock of internet was peer-to-peer instant communication. Probably some of you don't remember, you're too young, but if you have gray hair, you remember you had long lines in front of phones, or you would send in paper and mail chat with your family across states. People always wanted to chat, but they could not chat instantly, and that was the problem. So Twitter, Facebook, Instagram solved that user problem, and that was the disruptive innovation, and that's why that created venture returns. So the question then is, where do we think venture returns will come from in real-world asset space? Collectibles is what we think the answer is, the physical collectibles. How many people in this room collect something? It could be whiskey, it could be watches, it could be art, it could be sneakers, I don't know, Pokemon cards, anything. All right, not many, but somewhat. So the thing is, if you people who collect have tried to actually sell your collectible, if you have tried to borrow against your collection, or find people who are as crazy as you about the things that you collect, you'd realize that it's really bad experience. It's not really good. Now, we believe blockchains can make this experience better. And why is that? Because as internet unlocked peer-to-peer communication, blockchains at the most fundamental level unlock peer-to-peer payments. It makes for a great foundation for marketplaces, because marketplaces are, that's where you trade, and trade is nothing but exchange of two payments. Now, collecting, just like communicating, is a consumer behavior that has existed for thousands of years, but yet no instant cash-settled collectibles marketplaces exist today. You have to buy, and the delivery comes after many weeks, and auditing and all that problem. What if we could make trading all these collectibles an experience like trading stocks on Zerodha or Robinhood? To give context of the size of collecting market, 1 in 3 Americans self-identify as collectors. The numbers can, vary a little bit, but similar is true in Asia. eBay did about $10 billion of gross merchandise volume across different collectibles, and in the last 3 quarterly presentations, they have implied that collectibles is a big focus area. And it's indeed a big business, a $500 billion business across all the categories I mentioned and many more. But the thing is, the nature of collecting in the age of internet is changing. There are more people than ever who don't care about actually collecting. They are interested in flipping. They want to buy a watch at $9,000 and sell it for $10,000 and make a quick $1,000 profit. They do not want to deal with the logistics of collecting. They are doing these billions of dollars of collectibles trade across WhatsApp, Discord, Telegram, Reddit, eBay, and different places. The market structure is not as easy as trading stocks. When you ever see users jumping hoops and going through bad experiences to do what they want to do, that's where venture investors are very interested. There is a product to be made, there is a problem to be solved, and money to be made. So let's say online marketplaces, in simply, are not designed for collectibles trading. What are the problems with online marketplaces? For most categories, there is no one standardized trading venue, like Bombay Stock Exchange or whatever, where you can trade. People across the internet trade on WhatsApp, Telegram, Reddit, and all the things I mentioned before. And the spreads are massive, 10%, 20%. This just deters many people from collecting, because if the market is fragmented, the price discovery is bad. If the price discovery is bad, the fees, as I mentioned, is high. And that alone kills a lot of interest. But even after that, if you are into flipping, like you buy a watch, it comes to your home, you do the authentication and everything, it takes about 2 to 4 weeks. Now, how many watches can you actually flip if that's the speed at which you are flipping? Not much. That's why it's not great for flippers. And then you talk about storage problems. Financial problems aside, if you're into collecting, let's just say, I don't know, antiques, which people do, by the way, I'm surprised, but people do, it quickly takes up space. And if you live in a place like Bombay, Manhattan, Delhi, space is expensive. So people start, storing less. And fraud. All collectibles have a big problem of fraud, especially the one that's traded on internet. Now, we believe that blockchain-enabled collectible marketplaces, what we call BECMs, represent the next evolution of online marketplaces for collectibles. What is a BECM? In a one line, you would say a BECM custodies collectibles, guarantees authenticity, provides one-click redemption, and most importantly, unlocks instant cash-settled tradings for collectibles. You can only provide instant cash-settled trading to somebody if you can transfer the ownership instantly and you can settle the payment leg instantly. Now, BECMs leverage 3 crypto features to address this in unique ways. BECMs use stablecoins for instant global cash settlement. BECMs tokenize collectibles. That's where NFTs come from the Bored Ape era to now actual use case of NFTs, to transfer ownership instantly and to, across the globe. And finally, BECMs use permissionless markets of DeFi, to tap into global liquidity for trading and borrowing. We believe, I don't know how many people here are aware of what DTCC is, but there was this phase of electronic trading pre-Wall Street era where people would trade physically. Then DTCC came and made the trading electronic, which let people like you and me trade stocks from our homes instead of going, on Wall Street and exchanging papers. And it democratized trading and brought more people into trading. So we basically believe BECMs will create a foundation for trading collectibles by unifying liquidity. They will create better price discovery that will lead to lower fees, and generally instant cash settlement is great. And by outsourcing custody, so now the equation changes from how much can I store at my home to how much my bank account allows me to buy. So you can, instead of storing only 5 antiques at home, can go to 500 if you so desire. That increases the TAM again. And authentication, Airbnb, Uber, when all these things came, people were like, oh my God, who's gonna go into somebody else's home in taxis? But now look at us. We trust because there is a company behind which stakes its reputation. Similarly, a BECM would stake its reputation to say whatever collectibles I'm storing, they are actually authentic. Or if they are not, I will financially compensate you for that. Now, okay, this is all good. Hopefully you followed a part of it, but that does not mean this is investable. We have to go through what kind of collectibles marketplaces are actually venture investable. So we share a few factors here that might guide us in picking the winners. These factors, for simplicity, will break across 3 axes: emotional, physical, and financial. Firstly, collecting is a very emotional activity. If a collectibles category does not have a passionate group of people arguing, debating, fighting about the nuances of the category, there is no cultural relevance. And if there is no cultural relevance, people would not be interested in collecting these materials, and then there would be no thriving collectibles marketplace. Just to give you an example, I believe there are more people in this world who care about debating about Pokemon cards or such versus about the design of plastic cups. Now, I personally don't know, maybe there are people, but I don't think so. Now, there should also be a general consensus that if I buy this Rolex or whatever, this will hold value in the next 5 years. Because if it's not gonna hold value, why would you just buy and just sit on it? Moving on to the next axis, it's the physical axis. Sure, passionate community is necessary, but if you find other problems in the physical world, that makes it actually a problem worth solving. So what I mean is storage constraints, which I have given a couple of examples. If you are into collecting trading cards, you can store many of them in your wardrobe, but with fine art, you need to figure about the chemistry of your room, the temperature of your city. Can you actually take care of it? What I'm saying is the harder the storage problem, the greater the chance for Beckhams to actually help the collectors and build a venture scale business. And the fraud, I already touched upon it. So the more you give people, more the industry has the fraud problem, like antiques, for example, have a massive fraud problem. It's a China porcelain from 5,000 years back. Who is going to validate that? So the more the validation and fraud is prevalent, the greater for Beckham chance to build trust in the marketplace. So that's a venture scale outcome potentially. Lastly, financial access. I don't know how many of you are aware of StockX, but in US, StockX actually is a sneakers trading marketplace, and they have done a good job of, actually consolidating liquidity around the sneakers. So it's going to be hard for a new entrant to actually disrupt the liquidity mode that they have. But for something like watches and whiskeys, there are like tens of billions of dollars being traded on these things every year in these siloed chat rooms and forums. So there is a case to be made for such a startup to come and disrupt and become the Airbnb of watches and whiskeys. And the Goldilocks price range. Collectibles go from $5 to millions of dollars. But as a marketplace, your main business is how much volume can you generate and what's the fees you can take on it. So we can all agree that millions of more people trade luxury handbags, for example, across the world every year versus supercars. So Beckham's for handbags would make much more sense than Beckham's for Ferraris. Now, this is all good, but why now? There is no difference in investing if you're right, but too early is as good as being wrong. We believe crypto is reaching a point where some things are happening that is going to compound the momentum in the near term. A lot of crypto abstraction is happening where people are not worried about, oh, how I'm going to store the seed phrase? What if I get loose? Because now in the last 12 to 24 months, you see wallets have come with different features like social logins, passkeys, biometrics, passkeys, sorry. And the second thing is stable coins. I think stablecoins are proliferating. People understand stablecoin. You don't have to make a convoluted theory. Imagine a world where this could be a thing. Polymarket was a great example. In US elections earlier this year, billions of dollars were traded, and stablecoin was, paramount. Coinbase just announced integration with Apple Pay. A lot of crypto applications are integrating with credit cards, debit cards, Venmo. So, people are used to these things. And lastly, tokenization. With clear regulatory framework that the industry expects, more things will get tokenized because that's just an efficient way to transfer value across the globe. We believe collectibles are something that will get tokenized faster than other regulated assets because they are less encumbered by these things. And over the long run, there are, I would include financialization and institutionalization in one category because the more liquidity my collectible can have, the more collateral it could be used online to borrow stuff. I know people are right now borrowing against their whiskey collections, and the lenders are like, I wish you default because this is the thing I really want. Now, the more you see these kinds of phenomenon, the more liquid price feeds, you start, once you become a collateral, you can eventually be included in baskets. Once you can be included in baskets, world is looking for alternative assets to invest. You can create indices like ETFs, and that eventually there are trillions of dollars that are sitting in retirement portfolios. Even if you take a basis point of that, probably more, you're talking about billions of dollars. So you bring collectibles as a legitimate alternative investment asset class. And lastly, collector networks. Eventually, as I said, collecting is a very emotional activity. You would like to see, I don't know, if you're into reading, you might have had Goodreads page or something like that, where you display what books you are interested in. Imagine you have this page where you can showcase what watches you are interested in, how many watches you have, and your people can follow you, like your collectibles. They can actually use crypto technology to bid on it directly from the user interface without leaving the app. Hardcore collectors can actually be rewarded by the Beckhams to create these social networks and global events like, okay, top 100 whiskey collectors, please come to Hong Kong. I'm going to have this experience for you, where we'll have the best whiskeys, you'll meet the best connoisseurs of whiskeys. Now what happens there is Right now, these people have very weird ways to find each other via internet forums, or he calls, she calls, they call. Now, this is like a 100x experience. So now you start building trust on this platform, and that will further compound, and that's what you can do with collector networks on backends. So eventually, in the short history of internet, whenever a consumer application has come and disrupted a traditional industry, it has led to market expansion, and we believe same thing will happen with backends. So far, the classic examples are like Uber, Google, YouTube, etc. And Beckham's could be one of those. Thank you. Yeah.
Thank you for your presentation, sir. But I have a very fundamental disagreement here.
That's okay.
Frankly, there are a lot of auction houses actually. Although Goldwyn Auction and others, the trusted storage, and everybody uses a standard body as well for the collectible grading actually. And I don't think Beckham's can do them themselves. They'll have to go to certain bodies to get the card graded and authenticated, because that's a department everywhere that comes.
Yeah, I can share a blog with you I wrote earlier this year, which talks about in-house outsourcing, in-house and out-house authentication. And it has to take your questions there too.
Yeah. And second one is actually collectibles is about emotion, but it's also about supply and demand, and the right timing of a particular asset hitting. For example, if a baseball cards hit the market, if it hits the market again, it will be either a similar price or a lower price coming out. So sometimes we just want to hold for the right moment. And actually very high-end networks move via private individuals as well. For example, if I have a high-end card, maybe I don't want it to go public. Maybe I have a private collector who can just take it out like that. This is totally against the fundamental of collectible value.
Let me answer. You've been talking a lot. So you can keep that. You can do that. People can do that. This is talking about democratization. There are not everybody is a billionaire or millionaire in the world. There are people with $100,000, $10,000 markets, and things are trading. If you go sneakers for $50, $100. So this is more about bringing more people in, not only serving the ultra wealthy in the world.